David Brancaccio in Los Angeles here. This is what stock market investors, at least, see as a win-win outcome. The studio Paramount Skydance stock is up more than 8% in pre-market trading now after it's emerging the victor in the battle to buy rival Warner Brothers. And Netflix stock is also up by the same percentage because it pulled out and won't have to pay all that money to Warner Brothers, an entertainment conglomerate that owns movie and TV studios, streaming outlets, and cable TV channels, including CNN. Here's Marketplace's Nancy Marshall-Genzer.
Paramount Skydance is offering $31 a share for Warner Brothers Discovery. It's an all-cash offer, with much of the cash coming from Oracle founder Larry Ellison, the father of Paramount CEO David Ellison. Netflix declined to raise its offer for Warner Brothers, saying, quote, "The deal is no longer financially attractive." Paramount's takeover of Warner Brothers still has to be approved by federal regulators. The Ellisons are close to President Trump, who said he would be involved in the outcome. Paramount would buy all of Warner Brothers, including CNN. Trump said late last year that, quote, "It's imperative that CNN be sold." I'm Nancy Marshall-Genzer for Marketplace.
As this deal comes together, Marketplace's Kristen Schwab has more on the state of streaming.
Right now, Naveen Sarma, a senior analyst at S&P Global Ratings, says streaming is complicated.
And a mess and very confusing.
There are a zillion content providers accessed a zillion different ways, and subscription prices are rising. Sarma says viewers are starting to pick and choose.
You're seeing consumers binge watch stuff that they find interesting and then drop that service for a short amount of time. You're seeing seasonality with the services that have the NFL.
There are too many players in the industry for all of them to make money. It's why Ross Benish, a senior analyst at eMarketer, says more consolidation is coming.
Within the next 2 years, I think you're going to see more of these companies doing kind of what Sony has done.
Sony dropped the streaming side of its business, PlayStation Vue, to focus on licensing. We'll also likely see more subscription bundles and more companies, like Warner Brothers, get bought out. Benish says this might make the user experience less clunky. It could also make it more expensive.
Like, let's say you have all of the Paramount and Warner shows on one platform now instead of two. That's nice for consumers. But when you have fewer companies, you give more monopolistic power to those who are still operating.
And mergers would give combined companies more power over the kinds of movies and shows that get made. I'm Kristen Schwab for Marketplace.
S&P and NASDAQ futures are both down in the 0.4% range now. Uncertainty over tariffs is one reason government bonds have been popular this week. When bonds go up, interest rates come down. With the 10-year rate below 4% this morning, the average 30-year mortgage rate has been parked at 6% even for 2 days now after falling below for the first time in 3.5 years. This using Mortgage News Daily's calculation. Now, if companies are allowed to get money paid to the U.S. government on the subset of Trump tariffs now ruled illegal, will they pocket the refund and cheer up shareholders? Now, FedEx has just promised to give any refunds back to its customers.
Marketplace Morning Report is supported by GEP. With GEP Key, Agentic AI, and GEP Smart Software, GEP is at the forefront in agentic procurement orchestration and autonomous supply chains. And by Progressive Insurance. Customers can simplify their insurance needs and protect what's important by bundling home and auto. Learn more about bundling at progressive.com. And by Bison Managed 401k, active advisor management for 401k accounts. The calculator is at powermy401k.com.
Hi, it's Juana Summers. You might know that NPR and this station lost their federal funding last year. That means it's a new era for public media. We're still here, and we're committed to serving you as our new chapter begins. Let's get to work to preserve this essential public service. Donate to this station today, and thank you.
Do so right now. Give to WNYC.org, or you can give at WNYC, the app, or you can simply call and 888-376-9692. Good morning, I'm Michael Hill. With us is Bridget Bergen from our newsroom. It's our winter fundraiser. You count on WNYC and NPR to bring you reporting in the public interest, and we count on you. We rely on you to support that. As you heard Juana Summers say, that we lost all of our federal funding last year, and there is no hope at this point of ever getting it back. We need 10,000 donations in this fundraiser to help replace all that lost money. Asking you this morning, once again, to step up and support what you value. Click that donate button at WNYC.org or in the WNYC app and give. Financially support this station. Call 888-376-9692 and support what you value. Bridget, good morning.
Good morning, Michael.